some stocks just don't seem to know when to quit. Look at Marriott Vacations Worldwide, symbol VAC, the vacation rental business that was spun off by Marriott International back in 2011. You know I've liked this stock for a long time. In fact, we just had the CEO on the show at the end of February, and since then, Marriott Vacations has given you a monster 31% gain. Not only has the company reported a series of strong quarters, including a huge top and bottom line beat at the beginning of August, but lately we've also been hearing whispers that Marriott Vacations might want to merge with vacation rental peer ILG. We know some of ILG's major shareholders are agitating for a merger. Earlier this week, Bloomberg reported that Marriott Vacations had made a bid for ILG at $30 a share. I think the deal would make a ton of sense. I mean, these are great synergy here, but does it make sense to get our hopes up about it? So let's check in with Steve Weiss, the bankable president and CEO of Marriott Vacations Worldwide, hear more about where his company's headed and how it's doing. Mr. Weiss, welcome back to Mad Money.
Thanks, Jim. It's great to be with you again.
All right. First, Steve, you do have a lot of properties that are in some storm-damaged areas. I want to know how you come through it and what Marriott Vacations Worldwide has done to make the situation as, let's say, better as it can be.
Well, you were exactly right. We actually had 25 of our resorts and 10 of our sales centers that were in the midst of both Hurricane Irma and Maria. I'm happy to report with two properties exceptions on St. Thomas, all of our resorts have reopened and all of our sales centers have reopened except for St. Thomas. But it was quite a bit of work and effort to try to make sure that we did the very best job we could do in taking care of our guests and our associates, and then making sure that if there was any damage done to any of the resorts, that we quickly assessed that damage and did our best to try to prepare to restore and operations.
Well, that's terrific. I know that I was going to ask you about St. Thomas. Everyone seems to think that that has been the hardest hit. Do you know when that can get back online?
Well, the simple answer is there's two pieces to this, one of which is we have two resorts there, one our Marriott Vacation Club at Frenchman's Cove, and the other a Ritz-Carlton Club, which is down on Red Hook. The Frenchman's Cove property will probably be able to take guests back, call it the end of November, early December. However, there is no permanent power to the resorts yet. That's going to be the biggest problem. We're currently operating on temporary generators there. In Red Hook at the Ritz-Carlton Club, I think it's going to be a little longer. To be honest, it's a little further away, and there's a lot of power distribution that needs to get to that point. So we're really uncertain about the opening date there. All
right. Well, I wanted to get that in front of people because I don't think people realize they forget the devastation. There's so many bad things happening, unfortunately, in the world, but that is pretty terrible. Now, let me ask you, your stock itself has been absolutely terrific. The group has been great. We get these news reports about ILG, which I obviously think, because you're such a good manager, would be such a great fit. Do we have any definitive comment about where a possible bid might be?
Well, clearly, Jim, we have a policy and a practice not to comment on speculation, so I'm afraid I can't give you any color one way or the other on that. You know, stay tuned.
All right. And now let me just ask you, if the Fed keeps raising rates, let's say they do it in a lockstep, is Marriott Vacations Worldwide something we have to worry about? Because the stock has been such a horse. We've been so on it, and I'm starting to think, well, what could go wrong? People want these properties. You're selling them terrifically. Maybe it's financing.
Well, clearly, our sales, so through the second quarter of this year, and notwithstanding some of the impact from the hurricanes in the third quarter, this was our third consecutive quarter of contract sales increases greater than 15%. And some of that is the fact that our existing sales centers were up about 7%. And then our new sales centers, which we added 6 last year, are starting to get their stride as they ramp up through kind of a 3-year stabilization period. So we're very bullish about what we think of the future to be. We believe that the demand for vacationing, particularly in quality properties such as ours, is as good as it's ever been.
Now, when you are looking at where the demand is coming from, everyone's asking me, says, I was on a Costco conference call. I feel like I have to ask this stuff now. Are millennials interested in timeshares, or is this an aging cohort that likes to buy them?
No, actually, in fact, some interesting statistics, not only that we see, but also through the Timeshare Trade Association, the American Resort Development Association. The number of Gen X, Gen Y, and Millennials continues to grow as a percentage of the new owner buyers that are coming into the marketplace. So while I think the traditional belief is that this is somewhat of a boomer product, I believe that the statistics are proving that to not be true at all.
Well, I think that's got to be one of the reasons why the stocks just keep being discovered as great investments, because people are misreading your customer and misreading the value. I want to thank you so much, Steve Weiss, for being candid with us. Steve Weiss, Marriott Vacation Worldwide President and CEO. We've liked this thing for almost 70 points. It's a great company. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.